In this video, we will talk about tax impact on EPF. Now, tax impact on EPF is at three levels. Number one, on the contribution. Second is on interest on contribution. And third is on withdrawal, if any. Let's understand on contribution first. Now, a contribution has to be divided into two parts. One is the employer's contribution. Second is the employee's contribution. If you look at the employer's contribution, any amount contributed up to 7.5 lakhs is completely tax-free. Any amount above 7.5 lakhs will be taxed at marginal rate of taxation. If you look at employee's contribution, it is considered as a part of your taxable salary. However, for employee's contribution, one can avail of deduction under Section 80C up to 1.5 lakh rupees. Let's talk about yearly interest. Interest earned on employer's share up to 7.5 lakhs is tax-free. Any interest earned on contribution above 7.5 lakhs for employer's share will be taxed at marginal rate of taxation. For employee's contribution, any interest earned on employee's contribution up to 2.5 lakhs will be tax-free. However, any interest earned on employee's contribution above 2.5 lakhs will be taxable at marginal rate of taxation. Let's examine the impact of this at three different salary levels. Example number 1. For an employee of basic salary of rupees 20 lakhs. Now in this case, the employer's contribution will be 2,40,000, which is 12% of basic salary of 20 lakhs. The employee's contribution will be 2,40,000 again, because it is 12% of basic salary of 20 lakhs. The yearly interest on this will be 8.5%, which is 40,800, which is the pre-tax interest. If you look at the taxable interest on employer's contribution will be nil, because it is less than 7.5 lakhs as the employer contribution. Again, the tax interest on employee's contribution will be nil, because it is less than 2.5 lakh rupees as a contribution. So the total tax or the post-tax interest in this case will be full 40,800. So if you look at the calculation, the good news is that any individual with a basic salary of up to 20.83 lakh will continue to get 8.5% tax-free returns. So let's look at another bracket of basic salary of 50 lakhs for an individual. Now again in this case, the employer's share or the contribution will be 6 lakhs, which is 12% of basic salary of 50 lakhs. The employee's contribution will also be 6 lakhs, again 12% of basic salary of 50 lakhs. The interest on this of course is 8.5%, which is the pre-tax interest. Now let's understand the tax impact. Now on the employer's share, there will be no tax again, because like we see, the contribution is less than 7.5 lakhs. However, on the employee's contribution, now there will be a tax impact, because it is in excess of the threshold limit of 2.5 lakh rupees. So in this case, there will be a tax impact on 3.5 lakh rupees of the total employee share, as you can see in the table. So as we saw in example number 1, for a salary bracket which is the basic salary up to 20.83 lakhs, there is no tax impact. However, anything above 20.83 lakh, there will be a taxable impact, as we saw in example number 2. So what could be somebody's post-tax return? So for a salary bracket of 20.83 up to 62.5 lakh, if you do a calculation, the range of return will be from 8.5 to 7.48% post-tax return. Now let's take another example where the basic salary of an individual is 1 crore. In this case, the employer's contribution will be 12 lakhs, 12% of basic salary of 1 crore. Employee's contribution will be 12 lakhs, 12% of basic salary of 1 crore. Yearly interest of course at a pre-tax level is 8.5%. Now let's understand the tax impact. There will be a taxable interest on employer's contribution. Since the employer's contribution is exceeding the threshold limit of 7.5 lakh, interest on such excess contribution of 4.5 lakhs will be taxable. Similarly, there will be a taxable interest on employee's contribution. Since employee's contribution is exceeding threshold limit of 2.5 lakh rupees, interest on such excess contribution of 9.5 lakh rupees will be taxable. So as we saw in example number 2, anyone having a salary bracket of 62.5 lakh rupees will make 7.48% post-tax. In example number 3, since it's exceeding 62.5 lakh rupees, which is 1 crore in this case, up to 62.5 lakh rupees, one can make 7.48%. But any salary above 62.5 lakh rupees, the interest earned on that will be completely taxable, and that portion will make only 5.45% per annum. You can look at the calculations below in the link, or you can even contact your relationship manager who can take you through these calculations. However, our suggestion would be to get in touch with your HR if there is a possibility of restructuring your salary and restricting your basic salary up to 62.5 lakh rupees to avail a good post-tax return of up to 7.48%. There are two other important things we need to remember for interest on EPF. One is any interest earned on the EPF accumulated balance after cessation of employment will be taxable as per a recent ruling in 2018. Hence, post-retirement, one would make only 5.45% post-tax on the accumulated EPF balance. Another question is, what happens to the interest earned on accumulated EPF balance before these tax amendments came into play? Since the tax amendment started from 2021, any accumulated balance or interest earned on the accumulated balance will continue to enjoy tax-free return. For example, one has an accumulated balance of 1 crore before 2021. One would continue to enjoy 8.5 lakh rupees tax-free on that accumulated balance. However, there will be taxation on any future contributions made, as we explained in the examples above.